Welcome back to Nuclear News. Another incredible week for uranium that makes like over 100 plus positive weeks for the fundamentals of uranium. And the prices are starting to reflect the underlying fundamentals. Let's go through what's going on in the space. First up, we have the Sprott Uranium Miners ETF price action. Year to date, the Sprott Uranium Miners ETF is up 3.65%. Year to date, the URNJ Sprott Junior Miners ETF is up 10%. Right? So no matter what happens, as long as we see outperformance by the riskier sectors of the market, it means capital is still interested in finding deep value and maximum upside in this space. And so it's a good sign when the higher risk areas of the market are outperforming. The S&P 500 year to date is up 8.51%, so underperforming the URNJ. Over the last 12 months, the S&P 500 is up 27%, and the URNJ is up 42%. So uranium across most spectrums is massively outperformed the broader stock market. Let's see if that's justified. Well, this is what Morgan Stanley has to say. These are their preferred commodities. Uranium is the number one, bullish, over 10% allocation. The case for uranium, our commodity team maintains uranium at the top of the order of preference. Demand is likely to stay strong as reactors continue to come online while mine supply remains constrained for now. High uranium prices are unlikely to drive a demand response given their low share of total reactor cost. So Morgan Stanley fully understands what you all understand about this space. Their research team has caught up. It's time to buy the dip in nuclear and uranium ETFs, Bank of America says. So Wall Street across the board seems to get it. Then we have what really matters, which is capital. Walls and walls of billions of dollars of capital flooding into this space. This is the big game. This is what really matters. Very few industries have this type of support. PwC report shows 28 billion Canadian dollars of GDP benefit from AP1000 reactor construction. New units could add more than 12,000 jobs annually. So governments, the most powerful, wealthiest organizations on the planet that can print money, understand the benefit of nuclear power for their countries. So because of that, because we see the support behind it, we see massive news like this. Canada issues second green bond. The government of Canada successfully issued its second green bond. This 10-year, $4 billion green bond fulfills the government's commitment in the 2023 fall economic statement to issue a $4 billion green bond. The issuance is the first under Canada's updated green bond framework, which was released on November 21, 2023, and made certain nuclear energy expenditures eligible for green bond proceeds. These are new developments. But if you actually follow the billions of dollars of capital flowing behind the scenes, it could not get bigger for the space. That's why I say it's the big game. And it's definitely not just Canada. House passes bipartisan bill to ease approval of nuclear reactors. The bill's approval by a 365 to 36 vote sets the stage for House and Senate leaders to work out a compromised nuclear package that Democrats and Republicans are optimistic could pass both chambers, representing one of the few energy and climate policy areas that could see progress in an election year. So massive support for the most powerful people in the wealthiest countries on planet Earth. Nuclear tax credits underpin growth, says Constellation. Federal nuclear production tax credits are providing the foundation for the USA's largest producer of carbon-free energy to continue to invest in growth opportunities. Constellation Energy said it does not get bigger than having walls of billions of dollars of capital and huge support by the biggest, wealthiest governments on planet Earth. EIB shifts on nuclear power under new leadership. The European Investment Bank's new president has signaled openness to fund new nuclear projects, increasing investments in defense, taking on more risk as part of a pivot of the world's largest multilateral lender. Follow the money. The money is screaming that nuclear is a booming growth industry. And so what we do as early stage investors is look for these early stage signals about where the future is headed. Australians rally behind nuclear power as coal era fades. Again, public opinion shifting. Hopefully, that should trickle up to the politicians eventually. The poll, which reveals that 55% of Australians support the shift from coal-fired power plants to small modular nuclear reactors, underscores a significant pivot in public opinion, particularly among the younger demographic. It's a story of generational change, environmental pragmatism, and the quest for sustainable alternatives in a world grappling with the impacts of climate change, right? So again, sowing the seeds for a nuclear renaissance in Australia. And so really what all these headlines speak to is accelerating and increasing demand for uranium. IAEA annual projections rise again as countries turn to nuclear for energy security and climate action. So again, these models that show projections for demand just keep getting tweaked up. Unbelievably massive when you understand what's going on in this space. So let's look at what's going on with some of these assets that you guys own, right? $134 million gain in physical uranium pushes Denison to highest earning per share in 17 years. So the company's earning per share surged from 2 cents in 2022 to 11 cents in 2023, driven by the recognition of a significantly larger gain on its physical uranium holding. So again, these assets are incredibly valuable. They're increasing in valuable. The more exposure they have to physical uranium, the stronger their balance sheets, the more capital they can attract, and the better off their shareholders are overall. Encore Energy completes $70 million transaction with Boss Energy. This was headlined by the sale of a 30% ownership interest in Encore's Alta Mesa project to Boss Energy for $60 million US, and including an investment of $10 million US into Encore common shares. So Boss Energy expanding its footprint. Again, these companies' balance sheets are getting more and more valuable so they can start to expand and grow. So just keeping you posted as the early stages of the nuclear renaissance continue to unfold.